Global investors turn cautious on once favorite Japanese stocks. Japan's once booming stock market is now facing a significant downturn as global investors become increasingly wary. Citigroup Inc. and abrdn plc have recently expressed a more cautious stance on Japanese equities, driven by concerns over the country's sluggish economic growth and potential risks of a market correction. Earlier this year, Japan's stock market experienced a record rally, attracting significant foreign investment. However, this enthusiasm has waned, and foreign investors have been net sellers of Japanese shares for the fourth consecutive week. Citigroup has highlighted the material risk of a correction in the Japanese stock market. This sentiment is echoed by abrdn, which has also revised its outlook for the country's equities. The initial optimism was fueled by expectations of corporate governance reforms and the Bank of Japan's supportive monetary policies. However, the pace of these reforms has slowed, and economic indicators have not shown the robust improvement that many had hoped for. As the economic landscape remains challenging, foreign investors are reassessing their positions. The sell-off in Japanese stocks is a reflection of broader concerns about the global economic slowdown and its impact on Japan's export-driven economy. The Bank of Japan's monetary policy, which has been a cornerstone of the market's earlier gains, is now seen as a double-edged sword. While low interest rates have supported the stock market, there are growing concerns about the long-term sustainability of these policies and their impact on financial stability. In response to the changing sentiment, Japanese companies are under increased pressure to deliver on promised reforms and improve their governance structures. Investors are particularly focused on shareholder returns and transparency in corporate operations. Despite the current challenges, some analysts believe that there are still opportunities in the Japanese market, particularly in sectors that are less dependent on the global economy. However, the overall outlook remains cautious. For global investors, the key will be to navigate the uncertainties in the Japanese market carefully. While the potential for recovery exists, it will likely depend on a combination of improved economic indicators, effective corporate reforms, and a stable monetary policy environment. Japan's stock market, which was once a favorite among global investors, is now facing significant headwinds. The recent sell-off highlights the need for caution and a reassessment of the risks associated with investing in the country's equities. As Japan navigates these challenges, the focus will be on delivering tangible reforms and maintaining economic stability to regain investor confidence.